Hi, folks. You're tuned into Business Today TV, and this is Markets Today. I'm Sakshi Patra. This is where we talk all about stock markets, the way the day went by in trade today, and what really happened in the stock markets, all the key highlights that you need to know as an investor over the next 5 minutes. So do stay tuned. First up, it was a bad start to this week, if I may say so, because 870 points gone on the Sensex in the last 2 days alone. That's Friday and today combined. If you see, investors have lost about 6.5 lakh crore rupees of wealth in just these 2 days of mayhem that we've seen on the markets. It was an all across red screen that you could see right from the word go in the markets, which opened 0.5% lower. But when you close the day, we actually saw almost 1.5% gone on both the Sensex and the Nifty. 872 points for the Sensex. Although also when you talk about the Nifty, that fell more than 268 points to end the day below 17,500. Remember, right in the morning, show when I was talking about the stock markets, the way they are going to be headed, I talked about this level, 17,500. The question that we were asking is that whether the Nifty will be able to hold on to the 17,500 level, or will the markets fall below that? Most of the experts have been talking to us about, from the last week alone, we've been sharing with you expert comments which have been very, very cautionary, that have been talking about the markets being in an overbought zone, volatility to be heightened. They have been talking about how you could take some profits off the table, and some of them have also been talking about how this could again be a buy on dips kind of a market. Now, in today's trading session, we've also seen, in the last two sessions alone, the Sensex has retreated 1700 points, and this is despite the consistent buying of the foreign institutional investors. So what is really worrying the markets right now? Well, the last trip seems to be worried about some US Federal Reserve officials talking about more rate hikes in the coming policy meetings to bring inflation near the targeted 2% as far as the US is concerned. They've been talking about how there could be a chance of another 52 or 75 basis points interest rate hike in the Federal Reserve September meeting. That could actually also have all eyes on how the growth may respond to it, and maybe US could actually slip into recession, which was earlier being talked about as a far away action point. Of course, what's also going to be important for us to understand is that a speech by Federal Reserve Chair Jerome Powell at the Economic Symposium scheduled for August 25 to 27 in Jackson Hole is going to be a very, very important event to watch out for. Ahead of that, the markets are also nervous. On the other hand, the other factor that's been causing the decline is the US dollar index, that's been already climbing over the last few days, and now it stands above a 108.4 level as of today. Of course, the global markets have been in a bear trap yet again. We have seen that the stock markets across the globe have been feeling gloomy right from the last second half of last week, and this Monday as well. We started off on a weaker note following the global cues of US and Asian markets also showing this kind of a decline. Now, the wealth erosion of 6.5 lakh crore rupees that we've been talking about is something that experts do believe that is on expected lines, because most of the experts who are seeing this kind of fall coming in after the markets rallied in the last 2 months very, very sharply in a short period of time as well. Now, experts have been pointing out that the Nifty could slip further from these levels, because the key crucial level of 17,500 is now broken. So there could be some more decline really coming about. And what do the experts really say? They say that Nifty can actually test 17,300 and 17,000 on the downside. On the other hand, in case there is a pullback, then the markets could actually go higher to 17,700. That will be the next hurdle zone as per the experts now for the stock markets. Now, we have seen the worst fall in 2 months in today's trading session. So that's another factor that you should definitely watch. Of course, consolidation was triggered in the market in anticipation of the tighter monetary policy. And that exactly is what is playing out. Talking about the risk reward ratio in the markets right now, experts say it is not favoring the investors. The Nifty is trading at a premium valuation of 21.5 PE on a 1 year forward basis, above the long term average. And the rising dollar index, the rising US 10-year bond yield are also acting as key headwinds for the markets as of now. So what these are the key factors because of which the markets really slipped. In today's trading session, we saw stocks like Tata Steel, Asian Paints, Adani Ports, Tata Motors, JSW Steel among the major Nifty lowers. And on the talking of the gainers, we did see some FMCG counters really taking it in their and the defensives really taking the lead. ITC, Nestle, Britannia, Tata Consumer Products. These were the gaining names along with Coal India. The Nifty Bank, in fact, underperformed the benchmarks, falling 1.77% in trade today. The best sector was the FMCG sector, like I pointed out. But even the worst sector today was the Nifty Metal that fell 3% in today's trading session. The biggest gainer on the index was Tata Consumer, up 8.9% odd. The biggest loser was Tata Steel, that fell about 4.5% in trade today. Among the sectors, you did see Nifty Bank, like I talked about, the worst performing index among the benchmarks and the leading indicators. Auto, IT, metals, pharma, PSU banks, all of them losing 1 to 2% in trade. The mid cap and the small cap indices also shedding over 1% each. We did see among individual stocks more than 400% volume spike was seen in Torrent Power, PI Industries, Colgate Palmolive, despite the kind of move that we've seen. Over 100 stocks also touched their 52-week highs, including Adani Power, Torrent Power, DB Corp, ITC, and PC Jewelers. So those kind of stocks were definitely seen as kind of bucking the trend in today's trading session. Uh, Over the short term, like I said, the markets are going to be in a very, very volatile zone. Srikant Chauhan, head of research at Kotak Securities, believes the market sentiment could remain volatile in the coming sessions. The focus would shift back to global concerns, falling crude prices, weakening demand, US China tussle over Taiwan. Typically, a sharp intraday sell off and a bearish candle on daily charts, he believes, is an indication or continuation of weakness in the near future. A quick pullback is likely if the index trades above 17,575. Remember that as the key indicator on the Nifty going forward from here. And with that, I wrap up this edition, but do stay tuned on to Business Today TV for a whole lot more information from the world of business and stock markets coming up right up next for you. Thanks a lot for tuning in on this episode.